What is going on, apes? My name is Tyler. Welcome back to the channel. So in this video, I do want to take a big focus on margin calls. And what essentially did happen on Friday is we went down almost 1%. And a lot of people were thinking because NSCC 005 went into effect on Friday morning at 10 a.m. And it literally says that accounts will go into a deficit at 10 a.m. But I think a lot of people were expecting some shorts to cover and actually fund these deficits on Friday at 10 a.m. But that is not how it works, specifically with margin. As we do know, hedge funds, institutions, they are over leveraged on margin. So we're going to go over the basics of margin, but also how long this could take for hedge funds and institutions to either be forcefully liquidated on or have to cover their account deficits. So that is very important. Next week is going to be a huge week in my personal opinion. But keep in mind, I am not a financial advisor, not a financial planner or your dad, and there is a lot of manipulation, fraud, and corruption that does happen with AMC stock. So we can know all of these facts, but nothing might actually happen. So keep that in mind, but the facts are the facts. That is what we're going over in this video, but I'm not responsible if you guys make money or lose money in AMC or the overall stock market. So always take these videos with a grain of salt like you should with any other YouTube video. Now, we are also going to go over the technical analysis because we have had this rally from, about $30 all the way up to about $48, and the Ortex data is signifying to us we are seeing the short interest at about 20%. We have never been in a more bullish situation, guys. This is looking incredible. We also have the probability, a strong probability of going through a gamma squeeze throughout the next 2 weeks. So let's talk about all of this information. We're going to get straight into it. Drop that like on the video. Consider subscribing to the channel if you want more videos like this. Now, let's get straight into it, guys. Let's first off not beat around the bush. Let's talk about what did happen Friday. Like I said, we were down 0.81%, and after hours, we did bounce up 0.18%. So a pretty minuscule day. We didn't really do much to the upside or the downside. Pretty much a consolidation day. Now we're briefly going to go over what NSCC 005 is. We're going to take like zero time doing this, get into this margin call situation. So this is to all participants. This did go out, and it says NSCC has proposed to increase the minimum required fund deposit for each member from the current $10,000 to $250,000. So for each member has, in my opinion, roughly 10 accounts. Some have more, some have less. Now there's 4,000 participants of the NSCC. So if you times 4,000 by 10, that comes out to 40,000. If you times 40,000 by the difference between 10,000 and 250,000, 240,000, times those two numbers together, you come out with a minimum of $9.6 billion that will need to be funded into these accounts. Now it may be way more than that. We're just being super conservative here. It may be 20 or 30 billion dollars, which is only a fraction of the total margin debt outstanding, but still a significant amount. So all of that will have to be funded into these accounts, and that is per account, not per participant. So it does say NSCC is providing this notice to its members of the implementation and effective date September 3rd, 2021. On the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding at 10 a.m. Eastern Standard Time on Friday. So I think this is where a lot of apes are really not understanding what exactly happened on Friday, because it clearly says 10 a.m. September 3rd. And yes, that does mean a lot of these accounts, especially for the smaller hedge funds and institutions, are probably in the deficits as we do currently speak. So let's get into what exactly is happening with that and what happens with a margin call in general, or just margin in general, right? A margin account increases buying power and allows investors to use someone else's money to increase financial leverage. Margin trading offers greater profit potential than traditional trading, but also greater risk. Purchasing stocks on margin amplifies the effects of losses. So the fact that AMC is just going up right now, if these hedge funds institutions are on as much margin as we are seeing reflected in the FINRA margin data, then you are seeing these losses from the short sellers be amplified extramentally, and they are losing a lot on their positions. Now, you guys got to think about it. When you short a stock, you're not just shorting the stock, right? You are, but you have to put up collateral for that position, meaning if the position goes crazy, AMC goes to $100,000, the banks, whoever lent them or let them sell these stocks short, will actually be able to get their money back and make their end of profits. So the running theory is, with this big margin call, if they don't have the money to put up, they may have to liquidate on their AMC short positions to release that collateral to fund their accounts. Now, this is really only pertaining to the small to mid range liquidity hedge funds, right? The big guys, Citadel, the banks, they're going to have no problem putting up $10 million, $20 million, $30 million to stay in all of their positions and to fund all of their accounts. But the smaller guys with only less than a month's notice, only about a half a month's notice on NSCC 005 actually being implemented on September 3rd, you are likely to see a rush to get some liquidity to fund these accounts. So that is what is going on. That is the running theory. But you guys got to remember, margin call time frame. Many margin investors are familiar with the routine margin call, where the broker asks for additional funds when the equity in the customer's account declines below certain required levels. Normally, the broker will allow from 2 to 5 days to meet the call. That is what a lot of people are not understanding. Margin calls don't mean you get forcefully liquidated that second. It means you have a couple days, 2 to 5 days on average, to meet the call. Now, hedge funds and institutions, they may get different special perks, right? They may get a week or 2 weeks even to fund their accounts, depending what kind of pull they have with the brokers, because it's going to vary from account to person from person. But on average, 2 to 5 days. So if this did go into effect on Friday, then when are you potentially looking at some margin calls? Well, the market is closed on Monday, so that would potentially be Wednesday or even Monday and Tuesday of the following week. So this could take a little bit of time. The fact that the market is closed on Monday, it really screws things up a little bit, because that 2 days would have been on Tuesday, and then the 5th day would have been on Friday. Now, it may be the next week, but this could be a long-lasting effect, and you may see this gradually increase, right? Some of these hedge funds, institutions, they're going to need to put up requirements in 5 days. Some of these with special perks with the brokers may be 14 days. You really never know when it does come down to the hedge funds and institutions and what kind of special privileges they are getting from the brokers. Now, if you If you do not meet the margin call, your broker's firm can close out any positions in order to bring the account back up to the minimum value. This is known as a forced sale or forced liquidation. The brokerage firm can do this without your approval and can choose which positions to liquidate. So if they are not able to bring up their liquidity levels, the brokerages could actually liquidate their AMC position. So that is also something very important to keep in mind. But that is the overall situation with the margin call situation around AMC stock. It's not as if Friday at 10 a.m. came around and they had to put up this money, or there was going to be forced liquidations and margin calls. Essentially, there was a margin call. There was a massive margin call for a lot of people, but they do have 2 to 5 days on average to get money into their account. So that is what is going on with that situation. Now, let's take a look at this Ortex data. So we are indicating, and I did call this out on Wednesday when we did have that 8% drop, that we were likely to have seen about 2% of the overall float get sold short into the market, because the share utilization was staying pretty much the same. The free float on loan went from about 22.5% all the way down to 20.6%. And essentially that is about 2%. We did see the short interest go from 16.87% in that video all the way up to 19.53%. So almost a 3% increase in the short interest just over last week. Now we're looking at 19.53% short interest. Like I said, 99.91 million shares that are sold short. That is a very large amount. Guys, we've never been in a more bullish situation since we did have this last gamma squeeze from June 1st through June 3rd. So everything is looking very good as far as the Ortex data is concerned. Now, the share utilization is at 90.80%, which has come down a little bit, as we have seen about 2%. You guys see right here, the share utilizations went down about 2%. You've seen the free flow on loan go up almost 2% in the past 2 days. So I do expect the short interest to continue to climb, but the short interest can really only go up to as high as the free flow on loan is, because the free flow on loan are shares that are held in brokerage accounts that are not actually been sold short yet. So they're waiting to sell them short or to return them and not sell them short. That is where you will see the return shares. But you did see a lot of borrowed shares on Friday, 10.04 million borrowed shares. So that is why the share utilization is going down. Hedge funds, institutions, they are waiting to short the stock even more. And that is music to my ears. I would love to see AMC short interest go all the way up to 30, 40, 50%. if that could actually happen, excuse me, if that could actually happen, we would see a massive rally. The mother of all short squeezes would get incredibly close, right? You're going to see a lot of worried people if the short interest is well over 30%. That is a large majority of the float. But even at 100 million shares, that is about 2 days worth of volume that we did see on Friday, all buys going into the stock. So that is all you guys need to know from the Ortex data. Now let's talk about the gamma squeeze situation that we are setting up for. Next week, we're looking at 24,407 calls that are in the money. Not too much, but we do see a lot at the 40, the 45, and the $50 strike. And a lot of this that did expire on Friday was at the $40 and the $45 strike. Obviously, we did not close at $45, so a lot of those did expire worthless, or all of those did expire worthless, but you did see a lot at the $40 strike. So you're going to see that level of support around $40, in my opinion. We do have almost 80,000 calls that are out of the money for next week. A decent amount. You're going to see a lot more people flood into these weeklies, and especially the next weeks, but you're not really going to see a chance of a gamma squeeze next week. You might see gamma squeeze activity, right? You might see buying going into the stock, but not a full out gamma squeeze. But September 17th, that's where you're looking at the potential for a huge gamma squeeze, already having almost 118,000 calls that are in the money, and then 278,973 that are out of the money. By the time this does come around, we're going to be looking at a couple 100,000 calls that are potentially in the money, around 200,000 based on my estimates, and probably around 400,000 calls that are out of the money by this monthly expiration date. So it's looking incredibly bullish for a gamma squeeze. We're going to have to wait and see. But all in all, on this September 17th expiration date, you're controlling about 30 million potential shares that would have to be bought by the market makers if a majority of these contracts did go into the money, which obviously that would cause a huge gamma squeeze in and of itself. Now, let's take a look at the technical analysis just briefly, and we do see the 50-day moving average is now right at this $40.54 level of support, which does look very good. Let's see who is calling me, and I will go ahead and exit that off. But you could see we're going to see a lot of support right here at about $40 per share. Really, you want to stay above about $43 per share, so we're not going down more than we did see at the lowest points of last week, and that is exactly what we are seeing. You'll see bottom candle wicks, right? You'll see right here, you see these wicks, and then we do pretty much level out at about $43, and then we do come back up to over $44. The fact that we did close over $44 is a very great sign. We're looking for our next leg up coming next week. Now watch for the volume to go back into stock. We have had low volume days the past 2 trading days, 67 million for volume on Thursday, and then 52 million on volume for Friday. But the fact that we have not really moved too much on these low volume days is a great thing. When you see that volume leave a stock, you tend to see the stock cratering. So you're not seeing a lot of people actually selling out of their AMC positions. Ultimately, I do expect next week to get this break to 50 or even 55 and $60 per share. I think you're going to have a strong week next week. So that is what you guys need to know specifically about the margin call situation, the gamma squeeze, the Ortex data, the technical analysis. These are all very important points that I want you guys to be very clear on. So that is basically all we do have to go over in this video. Check out the 4 links linked down below in the description. There is a free AMC Discord chat, obviously all about AMC stock, so check that out. There is a link for the buy and sell alerts just over the past week alone with only a couple $100 worth of trading power, right, with capital. You would have made enough in just a week's worth of trading in profits to cover your costs for the buy and sell alerts for over 1 year's time. So very inexpensive. We like to keep it that way. Check it out if you guys do want to. 2 links for free stock. There's a link for public. You get up to $70 in free stock. Sometimes it's $10, sometimes it's $65. No need to link a bank account or deposit a single dollar, and that only takes about 3 minutes time to sign up and get your free stock. Also a link for Webull. Deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece. They do use payment for order flow, not nearly as much as a company like Robinhood or even TD Ameritrade, but they do have a setting in Webull where you can turn off the availability for them to lend out your shares to other brokers, hedge funds, and institutions without you knowing about it. So that is why I do have all those links. I hope you guys enjoy the rest of your weekend, and I will see you guys in the next video.